So let's start with sort of the bigger picture of the budget situation. And you can see the title of this slide is the state's revenue roller coaster. We've been using that metaphor because of the ups and downs that the state's very volatile revenue structure has. And this just shows you what has happened to our big three tax revenues. That's the personal income tax, the corporate income tax, and the sales tax, which make up about 80% of our revenues. Just what's happened since last June when we closed out the budget for the current fiscal year, the 14-15 fiscal year. And you can see, for example, in 14-15, we had originally assumed $103 billion. In January, when the governor's budget came out, he raised that to $105.3. And then in the May revision, which just came out a week ago, that was up to almost $109 billion. Similarly, revenues that had been projected for 15-16, the upcoming fiscal year, starting on July 1, have gone from just under $110 billion to over $113 billion. Let's take just a brief look at capital gains. So these are net capital gains. This is the income that particularly high-income people realize on their stock market financial assets or on their physical properties. And you can see how up and down capital gains have been over the last 20 years. You can see that we went from a level of around $20 billion in net capital gains up to $120 billion during the dot-com boom. Now, that's each $10 billion in net capital gains represents almost $1 billion in state general fund revenue. So you can see that within a very short time period, we gained almost $10 billion in additional revenue just related to capital gains. And I should remind folks, capital gains are not the only source of volatile income that we have. Corporate income is very volatile. You have annuities, you have other types of business income, but capital gains is probably the most prominent one. You can see where we are now in about 2014. We're still on the uprise. We're projecting that it will continue to rise before sort of tailing off. We have a lot of education experts out there. And so I know if I ask you how much of each new dollar goes to Proposition 98, I imagine that most of you have a number going through your head, and it's probably pretty close to 40%. That's our so-called Test 1 number, and it's approximately the percentage, 40%, of what the Proposition 98 budget represents of the overall state budget. However, that doesn't apply in every year. When we have what many of you know as maintenance factor, those are dollars that we didn't pay out in prior years when the general fund revenues were not doing as well. It's not a debt that you have to pay back, but you have to work your way back into the budget the amount that we shorted schools in prior year. So when you're paying back maintenance factor, you don't pay 40 cents of each new dollar. You can pay anywhere between 50 and 60% of each new dollar. Now, in certain Test 1 years, you can actually pay back a full dollar of each new revenue. It has to go to Proposition 98. And this is because of an interpretation that the state government made about 2 years ago on how they would interpret the payback of maintenance factor in a Test 1 year. And it has this rather strange result of all additional new revenues going to schools. That's obviously great for K-14 schools. It's not so good for the rest of the budget. Of that additional revenue, Proposition 98 is taking $5.4 billion of it. It could have been even more, except we accrued some of these new revenues that came in back to 2013-14. But you can see that despite this huge influx of additional monies, almost all is going to schools. Now, obviously, that's great for schools, but imagine if you were an advocate for higher education or for health or human services. You're thinking, well, where's all the money for things that we would like to do? And so it has been this amazing turnaround for schools, but it has made it a rather difficult situation, in effect, for the legislature and governor of what do you do for all of the other competing needs. Now, if revenues were to grow further in this current fiscal year, and let's say up to $1.3 billion, all of that would go to Proposition 98, dollar for dollar. So you can see what a very unusual fiscal year we are now in because of this Test 1 situation, booming economy, and the interpretation we made of how we would pay back maintenance factor. All results in an excellent situation for schools, community colleges, not such a good situation for the rest of the budget. So just kind of giving you a summary of where we are on the Proposition 98 minimum guarantee, that is, what is the combined total of state general fund and local property taxes that goes into what we call the guarantee. And again, you can sort of see it across this matrix if you want to take it by fiscal year. What happened to 13-14 has gone up a little bit between last June when we passed the budget and where we are now for each fiscal year. So you can see again the big difference in 14-15 when it is grown by almost 5.5 billion, or almost 9% over what we thought we were going to have for 14-15. And then in 15-16, if you compare the total that we're now looking at for 15-16, which is $68.4 billion, that's $7.5 billion above the level that we thought we were going to be at for 14-15, the increase that we would have from the plan level, or a 12.4% increase. Now, if you add all of those from the increase amount, you're talking about $13.5 billion of additional monies for schools, which is just an enormous amount in a very short time period. So, what does the governor propose to do with all of these additional monies? Well, he's basically committed about half of the amount to one-time activities. Because remember, a lot of things, when you're in the 14-15 fiscal year, the school year is almost over. So any new monies coming in for 14-15 basically are one-time in nature. So we're just talking about how the governor proposes to spend all of the one-time monies overwhelmingly to pay back these mandates, which again is a great thing for school districts because these are completely discretionary funds. The second biggest thing is to pay off those deferrals. Those were payments that we owed school districts in a given fiscal year that we had deferred to a future fiscal year, and it caused cash flow and other borrowing issues for districts. The governor would pay back all of those deferrals, so our payments would be back on track, which is another great thing for districts. And then a variety of other things for both community colleges and infrastructure, career technical. So then as far as what happens with the ongoing spending, and this is primarily the 2015-16 monies, and for K-12 districts, very similar to what we've done in recent years, most of the new discretionary money is going towards the local control funding formula. We've set these target amounts, and we're working our way from where we are now to those targeted amounts. We're hoping to get there in 5, 6, 7 years. Obviously, we're making great progress now. The governor would propose $6.2 billion that would just go to the existing formulas, again, discretionary dollars for school districts to use however they needed to spend them to meet their local accountability plans. California community colleges also do extremely well in the budget. On their side, there's a $500 million amount for the so-called adult education consortia, which they, along with the K-12 superintendent, sort of lead these consortia to provide adult education services. Community colleges get full growth in COLA. They get additional, on top of that growth in COLA, get additional amounts for apportionments that can be used for any purpose, and then targeted amounts going for various student support services. I hope people can see this chart on their screens, but if you are concerned about where are we on the local control funding formula, this gives you an idea of the amounts that we have now in our base payments to school districts, and then the top of the bar is in effect the target where we want to get to fully meet our local control funding formula targets. And you can see how we've added each year in recent years to close pieces of that gap between our base amounts and our target. And if you look now in the May revision, the amount that would go in, that $6.2 billion, would close over half of the remaining gap between where we are and where we would like to be. And then at the bottom of the screen, you can see that what is the total amount of the eventual targets that are being funded. And under the governor's May revision, 90%, we would be 90% of the way there at the end of the year.
Could you just explain the difference between the 90% and the 53%?
Yes.
It's a little confusing.
Certainly.
Yeah.
Just think of it as at the start of the 15-16 year, if you had the payments that are in the 14-15 budget, that's where you would be at the sort of the dark blue. And then on top of that, if we add the payment the governor's proposing, the $6.2 billion, it would close over half of the remaining gap between the start of that fiscal year and where you would like to be. So it's in effect the incremental change in the 15-16 year.
So the 53% is of the gap.
Of the remaining gap at the start of the 15-16
But
year.
90% of the targeted for full funding of LCFF is where we will be in the coming year.
If you make those payments as the governor has proposed, you would be 90% of the way there at the end of the 15-16 year. That's pretty amazing progress in a fairly short period of time. Okay, then our next slide shows you sort of, where are we now in our per pupil funding for K-12? This is always of interest to a lot of people after what we've been through with the Great Recession. We use 2007-8, not as there anything magical with that fiscal year, other than it was the last sort of reasonable year before the start of the recession. So some people will say, well, what was so great about 7-8? It's just that times were sort of normal at that. You can still have concerns that we weren't funding schools at the levels we should have been. But it's just a good comparison year. And you can see that compared with that fiscal year, where we are now, oops, here we go. Compared with where we were now.
Sound is just gone out.
Hopefully we're back. Compared with where we are now, if you look first at the blue line, the lower blue line, that's unadjusted for inflation. It's just nominal dollars of what we paid out each year. And you can see we've gone from just over $8,000 back in 7-8 to close to $10,000 in 15-16 if the governor's budget is enacted as he's proposed. Then, if you adjust for inflation, which is fair given the amount of time that's elapsed since 2007-8, you can still see that we are about $650 above in real per pupil spending from 2007-8, which if you think about what we went through in that recession, that's a pretty solid achievement. It doesn't account for the pain that districts went through in the intervening years, but if you think about where we are now, that's not bad.
And can I just clarify
Sure.
that figure, Mac? Is that the money that schools are getting from the state, or does that include total dollars, federal and other dollars that school districts are?
That's a good
raising?
question, and I should have made it clear. When we talk about Proposition 98 funding, we're only talking about the general fund and property taxes. So it would not include other local sources of revenue. If you had a parcel tax, does not include federal dollars. So it's sort of our basic amount that when we're budgeting, we think about as our Proposition 98 dollars. Well, just very quickly, what's happening with the higher education system? There's been so much talk about what we're going to provide for the University of California in particular, with the governor and the president engaged in conversations over the spring. And so the deal, at least as has been presented in the May revision, has various components. And obviously the legislature has to act on this, but this is what the governor's May revision proposes. No tuition increases for the coming fiscal year and the year after that. The governor has suggested that tuition could grow, say, with inflation after that point. So he's suggesting that it would be appropriate, perhaps, to have some tuition increases, but only at the rate of inflation to maintain real spending of those tuition fee revenues. He's added from his base amount that his additional, 4% that he proposed in January for the system, an additional $96 million, but this would go for the UC retirement system. And it would be with the conditions that for all new UC employees, they adopt the standard for top sort of pensionable base amounts that would have to be imposed for new employees. They're considerably less than what UC currently has. He would extend his multi-year plan, which apparently would entail 4% increases for an additional couple of years going through 18-19. And that UC has agreed to implement various operational changes that would help students get through in faster time, not take 5 or 6 years, but get through more quickly. And there would be operational efficiencies, such as better use of the summer semesters at UC. For the Cal State University, the CSU system, much less going on there. The governor does add an additional $38 million to their base augmentation of roughly 4% that he had proposed in January. And the governor's intention is that those funds go to two purposes: to improve student success, again, people actually graduating, not just starting in the system, but getting through in a reasonable amount of time. And he wants to fund an additional 1,500 transfer students. All right, so just briefly, what is sort of the LAO's quick assessment? The May revision came out on the 14th. Over the next 3 or 4 days, we've sort of needed to get our responses out to the legislature because they're in the process of hearing the May revision and closing out their budget. So just at sort of high level, comments. First of all, the May revision added a roughly $7 billion on top of what the governor had budgeted in January. So where did those $7 billion go? Again, this is very similar to the story that we've already talked about. Proposition 98 gets the vast majority of those monies. In addition, Proposition 2, which the voters approved last November regarding state reserves and paying off of state debts, takes another big chunk of the additional monies that you have to set aside either to pay for debts or it goes into what our so-called rainy day reserve and is not available for other purposes right now. That's to help us in the future when we have our next downturn. But that does take a lot of money off the table, which again, I'm not sure people sort of realize. The governor's one large new policy proposal in the May revision is a so-called earned income tax credit, which the federal government now has. Many other states have a supplemental state version of the EITC, as it's referred to. And the governor is proposing to spend about $380 million to enact a state earned income tax credit. This would basically help working, very low income people who are working supplement their income. Now, we have suggested that revenues could be even higher than what the governor is proposing for 15-16. That is, we're not sure that the governor's economic assumptions, particularly with regard to their assumption that financial markets continue to stay at rather their current levels, that's not really consistent with their revenues. If the markets stay at roughly where they are now, there's not some large correction or downturn or economic slowdown, we think that we could have over $3 billion in additional revenues in 15-16.
This is more than the governor's $7 billion.
More than the governor's $7 million, exactly. And we've obviously been higher than them in recent years, in part because we just think that our numbers are better capturing where the financial markets have been. If we're wrong on the financial markets, obviously we would be wrong on this revenue. But if the economy continues to not perform beyond where it is now, but just sort of maintain its current growth patterns, the markets stay at roughly where they are, we think there's a very high probability we could have even more money in 15-16. That is the coming fiscal year starting on July 1.
And then where would those monies go?
Well, you anticipated. What a great setup man you are, Lewis. Roughly 2/3 of those monies would go to additional Proposition 98 spending. Basically, at that point, we would have paid off all of the maintenance factor that I mentioned earlier, which was a very large sum of money going into 14-15. So we would have paid back all of that maintenance factor in a very short time period. We also would have some additional Proposition 2 requirements, but that still would leave about 1/3 or roughly $1 billion that could be at the legislature's discretion to do whatever with those funds.
About $1 billion.
About $1 billion. Now, we have cautioned the legislature, and I think here we're sort of singing from the same hymnal as the governor, as we have been for quite a while now. The legislature really needs to be very careful about making additional commitments, because remember that roller coaster metaphor that we used. You get to the top, and the fun part is going down on a roller coaster. It's not the fun time when the revenues start to go down for the state and for budgeting. So clearly the legislature can make some additional commitments and needs to be very careful. I would suggest that for school folks, this same point applies to them. Even though you have to sort of commit monies within Proposition 98, because under the Constitution we're obligated to do so, I think you can be very careful about how you make those commitments. That is, in 15-16 you could include more one-time commitments, such that if revenues were to go down, and the Proposition 98 guarantee go down, you would not have committed to ongoing funds that you couldn't support. We don't want to be in the same position we were in 2008, 9, 10, where school districts had to make cuts to their base budgets. So I think we just need to be cautious, recognizing that things are going extremely well now. Those can turn around in very short notice. Then with just a few comments before we end up here about the governor's specific proposals on education. Overall, we think that the governor's approach is very sound that he's taken on how to spend Proposition 98 monies. He gives the vast majority of the ongoing funds to the local control funding formula. That is, we don't try to reinstitute new categorical programs. We've committed to school districts that we were going to fund this, that they were going to have control over monies, that they were going to be accountable to their local citizenry for how they were going to use those funds to achieve the things that are in their plans. And so we think this makes a lot of sense to commit the ongoing funds for LCFF. He uses the one-time monies to pay off mandate obligations. We get another huge liability off our books, which is great from a state budgeting perspective. And as I said earlier, it's great for local districts because these are discretionary monies that they can use however they want to meet their local one-time needs.
And Mac, could you just explain what a mandate obligation is? What are those?
Again, in the past, the state has required school districts to do various things. And under the Constitution, when we require any local government to do something that they don't have control over, they can't pay for with fees or whatever, we are obligated to pay for those. And so over the years, we've required them to do a lot of things that have imposed cost, and we haven't paid them for them. We're sort of deficient in our liabilities in paying them off. And so there's this huge amount of money, which the governor would pay down a very large proportion of the mandate obligations. But again, it's great for districts because they already paid their own monies to meet these school obligations. So they've already used it. So when we give them the monies now for that liability, they've already paid it for the specific requirement. That money is now free for them to do whatever they want. Now, we do have a difference with the governor on how we would pay it back. He gives it out all on a per-student basis, and because there's a difference between how schools incurred those liabilities and a per-student amount, we have what was called leakage, that you don't actually pay liabilities dollar for dollar. And we've suggested a slightly different way of paying off the mandates by focusing dollars on unified school districts and high school districts, which have a very large piece of these mandate obligations. We would pay off a much higher proportion of the result of the remaining liabilities. On special education, the governor came out with a proposal and a $60 million, many of the recommendations based on a recent task force report. And we think there's a lot of good ideas. We're a little concerned there was not a whole lot of money and that was very late in the process. I hope folks appreciate that when the May revision comes out, the legislature only has a very short time period to pass a budget. And when the governor comes out in mid-May with new proposals, it doesn't give the legislature a lot of time to really think about it. Some of these things really should go through the policy process. So when we have concerns, a lot of times it's not because the governor isn't directing it towards some reasonable ideas. It's just we think the legislature needs a little more time to think about them. So we do have concerns with some of his ideas. And I think most of all, we think that one really important thing on special education that would make it comparable to our LCFF obligations is to equalize. We have great disparities between the payments going to the SELPAs, the special education, the local entities that allocate monies. And we think that in the same way that we're working our way up to those target levels and closing the gaps, half of that gap, if you remember from our chart, was being closed in just 15-16. We could take a similar view of special education, which is roughly 10% of our students, and try to close that gap on the payments that are going out to the SELPAs. And finally, there's a lot going on in adult education. We think that the governor has made a lot of significant improvements in his May revision proposal. We do have just a couple of larger remaining concerns, that he would lock in funds to individual providers. We think the whole point of having these consortia in the regions is to make sure that the dollars are going to where they're being effectively spent. So you don't want to lock into a provider just because that's what we've done in the past. And there are still some big statewide decisions that we think need to be made regarding fees and accountability and assessment, how we're going to sort of handle these consortia, and what are our targets and how we want to achieve things on adult education. With that, I had just putting up our website, lao.ca.gov. There's a lot more information that people can access by going to that website. When they get to the home page, they can click at the top on May revision proposals, and they can find all sorts of additional detail that we've put out on education proposals.